Okay, so you read the title, you know what the video's about. What you want to do is you want to wait for a sweep of London's low or London's high. Now, what does that mean, right? Any time before 7 a.m. is essentially London session. And what you want to do is you want to find the high and the low. So the low, in this case, is this low here, right? Pretty simple, pretty easy. What you want to wait for is you want to wait for New York, which starts at 7 a.m. here. You want to wait for it to sweep out a low or a high, right? London's low or high. And this is key because this will tell you the bias. And the reason you know it's a sweep is you can see all these wicks here. You see these candles are like all wicky. It wicks down and it instantly shoots off. And as it instantly shoots off, it leaves behind a bullish fair value gap. Now, the moment it leaves that fair value gap behind, that is essentially smart money telling you that the direction is now a reversal. Because New York always does this. It will sweep London's low when it's bullish and then go the complete opposite way. And when it's bearish, it will sweep London's high and then go the other way. Right? It's just the highest probability setup just to wait. So just always wait for that sweep. And once you've got your sweep, wait for a fair value gap to form because the fair value gap tells you essentially that there's going to be a reversal of direction because the fair value gap after a liquidity sweep in the opposite direction is very, very good for bias. Very good for bias, yeah. You don't hear many people talking about that. So you've got your fair value gap, right? What you're going to do is you mark it out like that, nice and easy. You can enter right at that fair value gap there because that's what I would do. I'd enter right at this fair value gap like that. My stop loss would be at the low of the candle that causes the fair value gap, right? Because remember, all this is a liquidity sweep. So if price is bullish, there's very little reason for it to come all the way down and take out these lows and then go back up, right? Remember, because you're a day trader and because you're trading New York session, there's only so many candlesticks that can print, right? Like price has to move quickly. It has to move somewhere quickly. And we're on gold, right? So we know we're in a bull market. And you've got your liquidity sweep. Price is quickly displaced up. You've got your fair value gap. There's your entry. Stop loss at the low of the candle that forms the fair value gap. Take profit. I'd say always a 2-to-1 at least. Or you could just aim for London side like that. Right? I'm telling you, boys, it's that simple. This setup occurs all the time. Like all the time. Just look through your charts and you will not you'll constantly see this. Just wait, right? And this is the key. Just wait for New York session. So 7 a.m. Wait and see what happens there, right? Because here it's 7 a.m. Right? At this moment, this tiny little green candle, it's 7 a.m. That is New York session. Right? Everything before it, so there is London's high. Here's London's low. Don't try and predict that. Oh yeah, we're gonna go bounce down like this into this fair value gap and go up. Because lots of people would have done that. Lots of people, right? They know we're bullish on gold. What they would have done is, let's just remove this and this. What they would have done is they would have been like, oh well, there's a fair value gap here, right? Why don't I just enter there and then put my stop loss here? So what they would do is they'd be doing this, right? Because everyone knows that New York is usually a continuation of London. So what they will be doing is buying this fair value gap here, buying this fair value gap out here, and then they get swept. And then they're right with the bias, and then they get angry, right? The reason why is because they've not waited for a liquidity sweep. And when you trade New York, always wait for London's high or low to get swept. Yeah, and I'm gonna give you another example, which is literally, I think it's, let's just look at it now. I think it's the day before, right? Yeah, here's our next example, right? Here is London's high, right? Let me just mark this out. Right here is London's high. And can you see how all these candles are like wicky, right? You see how it just wicks up and then it goes down. You have a little strong body here, and then we got a doji, huge displacement downwards, right? Huge displacement downwards. This right here is smart money telling you there's a reversal. We've taken out London's high. We've still got London's low, which is around here. I know technically this is 7 a.m., but this is essentially London's low, right? It's not really taken out much. So there's lots of liquidity here. Lots of people have gone long, right? So we've got our liquidity here. We've had our liquidity sweep. The moment we get these huge down close candles, we've got a giant fair value gap that we know price is going to go and refill. You've got an order block too. So what you're going to do is mark out your fair value gap like that. Enter at the fair value gap. You can even take the midpoint of the fair value gap because it's quite big. And then you're going to target at least a low here, right? But then you don't even get a 2-to-1. So I would always say aim for at least a 2-to-1. Like that. That's your setup right there. Right, and this is literally the day before. Yeah, so the day before and then the day after. And these setups occur all the time. Like all the time. Wait for a sweep of London's high or low. Wait for a fair value gap in the opposite form, opposite direction to form, and enter on that fair value gap, and then target the opposing liquidity pool, or a 2-to-1 risk to reward ratio. And yeah, Yeah, boys, it's that simple. That's how you trade New York. I think it's probably the easiest session, and this setup works on all forex pairs. It works on gold. I don't think it works on indices because of the indices open stuff, but I mean, I don't know. I've not really checked it out there, but yeah, this works on forex. It works on gold, and I hope you liked the video. It's that simple. If you did, like, subscribe, leave a comment for the algorithm, and peace.